Hello and welcome back to the No Tax Banking channel. My name is Ronald Madlock, and today we have a special guest, Tarisa Shelton, one of my great partners. We had a great conversation that you're going to learn a lot. Please, I have a question for you. And I don't know if you still get this question, but we listen to other type of professionals in, the personal banking arena, and they might have a way of explaining it, but how do you talk to clients, or how do you convey to clients information when their idea is, when you talk about infinite banking, when you talk about, banking on yourself, and you go, well, you're going to have a guaranteed average of 4% every year. And somebody's like, well, I can get 10% in the market. Like, how do you answer those questions?
And conversation, right? It's not an either or, it's always an and. So then the question becomes, well, what if you could make 4% and 10%?
Mm-hmm.
What if you can earn in two places at once? Is that something you'd be interested in? Most sane people are not going to say no to that, right? Because that's all you're doing. And then you can walk them through like consequence questions. Well, what happens if the market goes down? Have you lost all of that original money, right?
Right.
What happens if you put it in a place where it's safe and always earning first, and then you lose that in the market? Well, you haven't actually lost your original capital.
Mm-hmm.
So it's really
absolutely
just a hedge against risk. And so I think most people, if they understand that if they put their money there first, they're never actually losing it. That's a very powerful thing for them to understand.
Absolutely. I mean, that is perfect. That is perfect. But I'm gonna push back again, because inevitably this comes up. Well, but if I take out this loan from my policy, don't I have to pay interest on that? Aren't I paying interest on that? Aren't I, eating up all this great interest I can do doing your and strategy?
Don't I have to pay interest on that? Yeah, so then the conversation becomes, well, you own the bank. How do banks make money? And if you own the bank, are you going to pay more as a consumer? Yes, but will you make more as the banker? Absolutely.
I love it.
I
love it.
Yeah, it's really just I think the thing is, people have to think at a higher level, and how we're taught to think about money is only as a consumer. So really bringing them up the ladder, it's like, okay, consumer level, then investor level, and we're talking about the tippity top, which is the banking level.
Absolutely. I think the biggest thing, first of all, great answer to that question, Tarisa. Great answers to those questions. But I think, and Kyle, kind of talks about it all the time. Like, when people really understand what this concept can do, or what this concept is all about, and how your banking functions, and how having your personal bank, what it can do for you, certain things like that, you don't get caught up there, because you understand what this whole thing is about, how important you controlling your finances is, right? And first, and at the end of the day, at the foundational level, what we're trying to do is protect your money first before you do anything with it. And you can do whatever you want. If you want to buy crypto, fine, take the money, buy crypto. If you want to get in the market, take the money out, go into the market. But it protects your money first before you put it in a place where you can possibly lose it. Inside of your policy is the only single place where it will not lose value, and it will continue to grow as if it was still there. There's nothing else out there that allows for that to happen. So if the people that we're talking to understands that, how powerful that is, I think that's why we start off with with the car example. And if people can put our car example, together with that concept of, hey, once you put your money here in your cash value, whether you take it out or use it, it still grows as if you never took it out, and it keeps stacking and your money is compounding while you're using it. Once somebody understands that, man, then the light bulb truly goes off, right?
That's so true. I think about this all the time as well. I think if you were to pose the question, right? Hey, Ronald, we're talking about a savings account. Instead of draining your savings account down to zero, why don't you borrow against your savings account so that it's going to grow for you every single year because you haven't actually reduced the amount that is working for you? Would that sound like a good idea? And I think the thing that really trips people up sometimes is the fact that the tool we're using is life insurance. But if you're to pose that question of, okay, here is this environment, here's how this works, you're having your money work for you while you still have access to those amount of dollars, then it becomes such an easy conversation, because who wouldn't want to say yes to that?
Okay. Yeah.
And I think sometimes because it's like, oh, well, it's life insurance, it's like, oh, well, that sounds like more complicated. And it's like, no, it's really the same. It's the same concept that we just talked about. We're just changing now the environment in which we store our savings. That's all. It's really the simplest thing ever. It's like, even if you ask a 10-year-old, like, hey, Jimmy, you have $10 here. Next year you could have $11. I'll give you a loan against that money. And what you're going to earn next year will outpace what you pay in interest.
Yes. Yes. And Tarisa, the biggest thing, and I think you mentioned it, once we say life insurance, because it's the misconceptions of what it is, what it's for, and what it can do. Right? And people, as soon as you say life insurance, they go, oh, I know what that's for. That's for death. I'm like, no. You're like, no, it's a lot more than that. And to me, I've found that when talking to people, that is the thing that trips people up the most. Like, why am I putting so much money into something that only benefits me when I die? And trying to break through that mentality that this is only something for death. And because they're thinking about, well, I'm just paying this thing and then I don't get any benefits of it while I'm still living, and turning around that misconception. Again, it's that mindset. Man, mindset is everything.
Well, it absolutely is. And really, if you're looking at it as a savings account, like, don't look at your savings account and say, like, what's the least I could put in there? No, because the more you see your savings grow, the more excited you are that you have that stability. So it's like, if you know you have access to cash at any point, and you know that you're going to be earning on the amount that's in there, and you have access to them without actually draining your account down to zero, like, it really is a no-brainer when you fully understand what's happening. It's just like Nelson says, when you know what's happening, you know what to do. And I think his book is the best resource for that. I think that there's so many, like you said, there are a lot of misconceptions out there, but then I always go back to, well, where are banks storing the majority of their capital? And it's in these assets, right? And it's we are really incentivized to not understand these things, because we are the people that large corporations and banks are making so much money off of. So
yes,
not incentivized to have this information. And it's powerful that we do have this information. And when people know what's happening, they know what to do.
Absolutely. And you know what? This is what I was thinking about today. I was like, because again, every day we're learning new ways to construct policies to benefit people. And I was like, even if somebody did this, if they set a really high premium, between their base policy and their PUA, and they're able to, I say, borrow money, let's say use a credit card, pay their premium off every year, take the money out, and just pay off their credit card every year. When year 5 and 6 hits with your policy, they start getting paid just when they pay the policy. Even if all they did was just did that and they paid all the money back, they will start at that point. Their policy will grow by more than what they put in. And I'm like, and it blew my mind. Nah, that's not something that I would want to do because maybe interest or something like that. But your policy is still growing, right? It's still growing, and money is being compounded from money that's not even yours. It's like you put debt to work to make it benefit you.
Well, and I think too, like when you kind of get lost in the sauce about like the mechanics, I think what people are failing to realize is the outflow of your current situation means 90% of your income is leaving you forever.
Mm-hmm, mm-hmm.
You have the ability to redirect 30, 40% back to yourself.
Mm-hmm.
Right? We're not talking about rates of return. We're not talking about compounding interest. Like, yes, all those things are important. That's how this process works. But we're talking about being the bank.
Mm-hmm.
And that means that banks, in order for a bank to be more profitable, they increase their loan portfolio. So I think that's so important for people to understand is you turn your debt into an asset. You can turn anything that was once a liability into an asset with this process.
Right.
And a return of your capital is so much more important than return on your capital. And what we're offering here is a place right?
Powerful statement.
Yeah. Like if you knew like, hey Ronald, you're gonna spend, I don't know, let's do a conservative, like $40,000 in your lifetime for vehicles. And then I'm saying, hey Ronald, you'll be able to redirect that $40,000 back to something that's always growing for you and still have your vehicle, right? Who gives a shit about rates of return at that point, right? That's why I'm saying I think that whenever that happens, you have to redirect the conversation to what we're actually talking about, which is banking. We're not talking about an investment vehicle. We're talking about how to be the bank and how you can redirect every single dollar that was once going to another institution back to yourself.
I can't wait to hit that sweet spot, Tarisa, when I can figure out how to get all my money into my policy first and then bring it out. I think that is my goal. That is my sweet spot. And then I do that into the point where I can literally just take out my money at the beginning of the year. Like after I pay my premium, I take out all my money that I need for the year. And all the money that I make for that year, I just stuff it in the policy through PUAs. So that my PUAs are just growing and growing and growing. I can't wait for that day. Because I don't need money. I have my money already. But all the income that's flowing into me. And again, Kyle just achieved that, 8 years? 7, 8 years, I think it was.
Yeah, and what's crazy too is I think he just started an $8,000 policy. And it's crazy to see, like when people are really in infinite banking, it's crazy to see the people that are really doing it, how often and how much they're increasing the amount that they put in every single year.
Wow. It's definitely something special that people, need to know about. It's definitely something special that we need to talk about a lot more. And people don't understand how powerful that is. Because, what was really special is that he was like, because effectively, he could take the year off. They can take the year off. You know what I mean? But instead of that, they went, let's bring our family together. And people underestimate how important being a private bank is to your family. People are like, what does it have to do with your family? Well, you bring your family together and you say, hey, family, I have this money here. What are your debts? Let me pay that off. Instead of paying them, you pay me. So now the families, you know, people always talk about debt to income ratio, all that type of stuff. That goes down in the eyes of the banks and in credit reports and all that type of stuff. So you successfully paid something off. Now you have a family member you're able to offer payments to. So now that family member is making interest, but they're getting cash flow, right? That's going back into their policy. Now everybody's helping everybody.
Mm-hmm.
Everybody's helping everybody.
And I think, yeah, that's actually, when I first learned about this, that was like the main appeal to me, is I was like, wow, when you see this thing at a big picture level, like imagine being able to finance a mortgage for your kid, and all that money that he pays for that house goes back to him once, you know, we eventually pass whatever. Like, that is an insane gift to give somebody. And that is the power, right, of being the bank, is instead of all that money going outward, leaving you forever, it's going inward. And now it's becoming a perpetual wealth system that's always being replenished, because death is not an if event, it's a when event. So we might as well, you know, make sure that our family and the people that we love are better off because of it. And like you said, not only does that make for a great passive income stream, it also is an avenue to redirect every single dollar that would be spent in that family back to a pool of money that can then be used for college education, for businesses, for like whatever, right? And obviously there's rules that I think should be put in place and responsibilities for the use of that capital, but it's just so exciting. And I don't even have children yet, right? But I'm just like thinking about, like, when I do, I'm teaching them that mom is the bank, right? You will pay me interest because this is going right back to you at a later date. You're essentially just recycling the same dollar that you've already earned over and over and over again. And I think sometimes that's a hard thing to conceptualize because we've never been taught that it's possible, right? But again, that's what banks do. Like, if you literally just think about what banks do and you repeat that same process on an individual, family, or business level, you're going to be so much more successful than the average person that's giving away 90% of their income.
Absolutely. Oh my gosh. Like you said, oh my gosh. Again, another jewel that's lost on people. Like you said, when you pay me back, I'm just going to loan it right back out again. Same as what the banks do. So now that money is making even more money. Talk infinite, right? Infinite returns. It is just, again, when people get it, when people understand that is what it's all about. And again, when the money goes in, it's continuing to grow. It's continuing to grow everything. And it comes back to our family, you know, and it is going to come right back to you. Long-term thinking, right? Long-term thinking. And we always say that, you know, this is a process, not a product. But it's the flow, the current, right? The currency of money that builds, right? It's the currency that increases the value, that in and out, that exchange, that constant exchange. And you know what's so funny? You kind of alluded to it, but you didn't say it. At no point in time did we say, you need to make extra money, need to get a job on the side. We're talking about the money you're going to spend in anyway. The money that you had going to savings anyway. It's the same Absolutely. Dollars that you're making. It's the same, but we're just putting it in a different place that's giving it an extra job that's giving you and your family more of a benefit. At no point did we say extra money. The same savings that you're putting to the side, just put it in your policy. The same payment that you would make to Ford, Chevrolet, Honda. How about you take what's in the policy, pay it off, and then pay yourself plus interest, right? It's the same dollars. It's the same, and you choose your terms, right? If you want to give yourself 6 years instead of 5 years, okay, fine. Just make sure you're diligent about it. Make sure that you're doing it. That's it. It's the same dollars. Thank you for tuning in today. For more information, please go to our website, notaxbanking.com. We can't wait to help you.